Season greetings to everyone out there. Christmas has come and gone, and we thank God Almighty for keeping us beyond Christmas, even as we fervently pray for a hugely successful year 2013. With me on today's episode of Tax Matters is Christina Pius.
Season's greetings, everyone, and welcome to Tax Matters.
And I am Olumuyiwa Matuluko. Last episode, we had a guest in the house in the person of Mr. Innocent Ohagwa, the director of the Large Taxpayers Department, non-oil, at the FIRS headquarters in Abuja. Mr. Ohagwa came into the studio to share his thoughts with us on voluntary tax compliance. Along the line, Mr. Ohagwa spoke about self-assessment as a compliance tool. Ardent viewers of this program and followers of the activities of the FIRS will readily agree that self-assessment is the new mantra. This is the song on everybody's lips. Today, we have something on self-assessment coming from one of the FIRS formations in Port-Harcourt. But before then, the concluding part of our interview with Mr. Innocent Ohagwa. Can you share with us some of the antics of tax dodgers that you have come across from time to time?
Well, some of them, you can say a company that is alive doing business will claim to be dormant, or a company that has been in business will tell you that it has not been getting businesses, that has not been doing anything. At times they relocate, or proceed to incorporate other companies. But those antics will not go far because with policies put in place, like tax identification numbers, third-party confirmations, use of withholding tax and VAT schedules, using our web portal platform, and then also to third-party confirmation, because bank statement returns that is mandatory under the law for banks to make to Federal Land Revenue Service. When you say you are not operating and the returns we receive from the banks say otherwise, the system will still come after you.
But how do you get my bank statements? Is it not what I give you that you take?
Bank statement is the taxpayer.
Yes.
Are you getting me?
Yes.
But there are also independent returns. Banks are expected to return to FIRS under the relevant law. Yes, FIRS Establishment Act and the Companies Income Tax Act. There are sections there that enables banks to make returns to Federal Land Revenue Service. We use information from those sources too.
So you have measures to checkmate
Yes.
the antics of tax dodgers.
Yes.
But really, what qualifies a company to be regarded or to be for the FIRS to agree that the company is dead?
Is it dead or dormant?
You tell me.
Okay.
What is the difference between dead and dormant?
Okay. If it is dormant, the cessation has not taken place.
Okay.
Cessation. If it is dead, then that means the cessation rule will come in, whereby he has to prepare the terminal accounts and then using the rules of cessation to apply. But it is dormant if the going concern is affected, or is as a result of if it's a one line of business, like based on contract. It may for some years not gotten contract, or relocated, curtailed down its operations. You cannot actually reach on to such taxpayers. You say it is dormant. But if it's a going concern, live and it's operating, then you won't say it is dormant. Rather, you will say it is a non-filer, a non-compliance, and you require another strategy to compel the particular taxpayer to comply.
But you know that sometimes we experience, companies
Yes.
or sectors of the economy
Yes.
experience hard times,
Yes.
like the textile
Yes.
industry
Yes.
in the north,
Yes.
Kaduna, Kano, Zaria.
Yes.
We know. Now, a situation where a company for about a year or two has been finding it difficult to pay salaries, has been maybe selling some of his assets and all that. Okay. Where does the taxman come in? Do you empathize or sympathize at all? Or you just want your money?
No. We do. We are also human beings now. We sympathize, we empathize. The question you ask is that during that period, is having problem to pay salaries where income generated?
Yeah, incomes are maybe generated, but not even enough.
Okay.
Salaries have been cut by half or by one. Even abroad, we read about them.
It will prepare returns, it will prepare accounts, and the accounts will show loss. And if accounts is showing loss, you definitely will not have anything to pay. But if you do not file returns, you do not receive letters, how will the tax officer know that, you just say, I'm not doing anything. But if you file returns, your income has declined, your costs have increased. It will reflect in your financial statement. And under that situation, definitely, if you make a loss, you are not liable to tax.
Taxation is on profit.
Yes.
So, basic to this. Okay. Except minimum tax. So what does that mean?
Yes, minimum if you make a loss, or you don't, you file in your returns, there's no tax to declare. You need to compute minimum tax. Minimum tax is based on gross profit, the share capital, paid-up capital, the net assets, 4 parameters, turnover, then on certain percentage, but it's usually very, very small.
It won't come to much. So he
pays
pays that.
Yes.
Now, so central to this is records, communication.
Yes.
Filing of returns is very important.
Yes, very key.
Because the taxman cannot depend on hearsay.
Definitely.
Okay. We find situations where people call us on the program and say that they want 3 years tax clearance certificate. And we ask, what do you do? So, I've not done anything in the last 2-3 years. Well, I don't know how the taxman will react, but go to the office. If you receive somebody in your office who comes and says he has not done business for 3 years, but he wants a tax clearance certificate, how will you react?
You will verify. We will ask you to get us your bank statement. Also, file your accounts, statement of affairs. If there are no operations, there is statement of affairs. A statement of affairs will have your capital, will have your expenses. Even if income is zero, the statement of affairs will show. And if there is no income to tax and you are not liable to minimum tax, perhaps you are agric or you are under 4 years of operation, then you will be given tax clearance certificate. Yes. But if we carry out due diligence, ask you for bank statement, check our web portal, check the withholding tax and VAT rendered by other organizations, if your name will surface in those areas, then
alarm will blow.
Yes.
Then it shows that I'm actually doing business. I'm just pretending.
Definitely. There are cases where you see, taxpayers come and say we have not done any business. But when we key in your particulars or do your name search, the organizations you have done business with, it will show in our system.
Is that why sometimes you refuse to give people tax clearance certificate or delay it?
Yes, we refuse or we write to, giving you reason within 2 weeks. But you can get it before 2 weeks.
Okay.
If you are okay.
If you are refusing me, you will tell me why.
Yes, within 2 weeks.
Oga don come o. Tax man na you. Sit down. How long you thought say you go take bring the tax clearance certificate for me?
Oga, once you give me the money, the tax clearance certificate go ready now.
Now?
Yes, Oga.
Oya, wait, make I bring the money.
Wait. Agent for Federal Inland Revenue Service? This one a Wururu person. Go for here. Guy, forget all these Wururu people. Go any Federal Inland Revenue Service office where they near you. Go collect the original tax clearance certificate. To know the original tax clearance certificate, the tax certificate must get FIRS watermark. It go get signature on top of the FIRS seal, and the name of the tax office where they on top of the certificate must they correct. No print, no give, no even collect fake tax clearance certificate. FIRS don't want say anybody wey dem catch with fake tax clearance certificate, na jail straight.
For more information, visit www.firs.gov.ng or any FIRS office close to you. FIRS, it pays to pay your tax.
Finally, sir, what is your advice to the company owner out there? How do I comply? We're talking about voluntary tax compliance.
Yes.
How do I ensure that the FIRS is happy with me?
Well, many of them are already doing it, so they know that they know the right thing to do. The large taxpayers, like I said, if you prepare your returns and file as and when due and make payment, the implication is this, that it's not every case we need to audit or we need to investigate. Our audit these days is based on risk, and triggers. So my advice to them is that they should continue to do the right thing, remit all deductions they make as and when due, be it personal income tax, VAT. They should not keep it back, because the offenses are weighty and it could cause reputational damage. When a company has to be taxed as evading tax, since we know that evasion is a crime against the state. So my advice is that they should keep appropriate books, render their returns, pay their taxes before the due date.
On your behalf, we want to most sincerely thank Mr. Ohagwa for coming on to the program. Mr. Ohagwa, thank you very much. Welcome back. The program is still Tax Matters. Our next offering is the story of the Stakeholders Interactive Seminar on Self-Assessment, organized by the Large Taxpayers Office of the FIRS in Port-Harcourt. It was held on Wednesday, the 24th of October, 2012. Christina Pius has the report.
The interactive seminar had in attendance a large crop of stakeholders, including large taxpayers, tax consultants, chartered accountants, and the executive chairman of the Rivers State Board of Internal Revenue. In his welcome address, Tax Controller, Large Tax Office Port-Harcourt, Mr. A.I. Okonkwo, spoke about the tax collection profile of his tax office in the first 9 months of 2012.
That with the cooperation of our stakeholders, ATO Port-Harcourt has performed relatively well in the area of meeting our revenue collection target. Total target for January to September 2012 is 26.298 billion naira, and we were able to achieve 6.5 billion naira. So we therefore exceeded our revenue collection target by 283 million naira, representing 1.08%. I sincerely thank our stakeholders for remitting their taxes as and when due.
The tax controller, however, lamented that the taxpayers in his jurisdiction were yet to fully embrace the self-assessment scheme.
However, in the area of self-assessment, many of our taxpayers have not done very well. There are a total of 171 active taxpayers in the office. Out of this number, only 83 companies had filed their income tax and income tax returns. Have filed their income tax and income tax returns as at date, representing 48.5%. A total of 88 companies have not filed their returns, their self-assessment returns for 2012 year of assessment.
Coordinating Director, FIRS Operation Group, Mr. S. Ogungbeson, was represented at the event by Mr. A.J. Bamidele, Director, Large Taxpayers Department, Oil and Gas. A paper on self-assessment titled Enhancing Voluntary Tax Compliance Through Self-Assessment, Issues and Challenges was presented by Mr. C.C. Ekechi. Thereafter followed a vibrant question and answer session.
Thank you very much, sir, for the opportunity you've given us. But I want to say that the problem of self-assessment has issues with the system. Why am I saying that? Assuming that the client has completed the tax returns and he wants to file in his taxes. And he must have withholding taxes, most especially from the oil and gas, whether upstream or downstream. He must have his withholding taxes as an offset of his tax liabilities. Most of the time, these things does not come. And when it comes in trickles. In such situation, the client has no other option than to wait, because he cannot peacefully bring his money to pay for the taxes, which he might not have returns, because even the withholding tax is suffering some stifling problems in terms of returns.
The issue of instrumental payment, that was the first question that was raised to be explained. While making the keynote address, I said instrumental payment is still in the regulation. And regulation is just explaining the law and setting a standard how the law is going to be implemented. That's just all the regulation is doing. Regulation is not enacting another law. Going by that, if you go to the law on self-assessment, it says the taxpayer is entitled to self-assessment, or who files self-assessment is entitled to cease instrumental payment. Entitled to, not a right, is a privilege the way it's put in the law. And the law goes further to say that you have to apply to the revenue. And revenue may, that's the word, may approve the instrumental payment, which have to be completed on or before November of the year. Now, revenue observed, the management of FIRS has observed that in implementing this law, we have a lot of inconsistencies. And to bring about consistency, regulation is put in place. And what does the regulation say about this instrumental payment? That taxpayers, you have the right to also continue enjoying your instrumental payment. But rather than me allowing you post due date, you should bring it pre-due date. If you want to enjoy instrumental payment, start to pay before your due date, so that the last payment coincides with the due date of filing. That's one option. You still also have another option. Yes, I don't want to, all this your wahala. I want to pay 2 months after my due date, which the law also allows you. And the regulation has not taken that one away from you, that you still have your right to pay within 2 months after the due date. In this case, you have lost your right or your privilege of instrumental payment. Then it has to be paid in one lump sum. Then on the issue of withholding tax, I will start by saying FIRS today has moved from what we used to know as FIRS on withholding tax payments. We have what we call Project FACT. This project provides a platform that when you upload your schedule into the system, anywhere I am as a revenue officer within this country, I can view that payment, which means I don't require any confirmation from any other office. I can sit at the comfort of my office in Port-Harcourt, and if you as a taxpayer suffer withholding tax in Lagos, I should be able to look at it in Port-Harcourt and grant it to you. Whether you suffer it in Maiduguri, I should be in Port-Harcourt and be able to look at it and view it and give it to you that actually you have suffered it. And the project also goes further to say, even not viewing, we should be able to credit your account as a taxpayer. And that's why the issue of taxpayer identification number comes in. But while we are doing that one, since you can view it, I don't need to use it to delay your granting you tax clearance certificate. We'll come to issue of tax clearance certificate shortly. On that basis, there is no excuse for anybody. I want to wait and confirm. No, you should be able to do it within 3-4 hours. Now, the other issue is, will I wait until I get my credit notes before I now file my returns? The answer is no. We said, we believe you, we trust you that you are doing the right thing. Submit your returns, and nobody is going to reject it. We will accept your returns as you have submitted it. We don't reject self-assessment.
Now, for a company whose accounting year end is 31st December of every year, the Act specifies that their late returns penalty will start to count from 1st July. But we had an experience where one of our clients, in computing the late returns penalty, we were told that the late return starts from 1st June. Now, we went further to ask, why is it so when the Act specifies 1st July? Now, we were told that that is management position. So our question now is, which one do we now follow? Is it the management position or what the Act specifies?
The month of failure. The law did not say days. It never mentioned the day of the month. It says the month of failure. When is the month of failure? The month of failure is June. However, if you submit your returns on the last day of June, you have not failed. Then I cannot penalize you between June 1st and 31st or 30th of June. The first due date on which you can now make your payment if they have failed is July. Therefore, the month of failure is June, but the payment does not become due until July.
There you are. Our interview guest, Mr. Innocent Ohagwa, did say in the first installment that come January 2013, the Federal Inland Revenue Service will insist on full implementation of self-assessment. 2013 is here. Don't be caught napping. Don't be caught unawares. Our advice is embrace self-assessment. File your returns on due date. Pay in full before due date. In fact, we cannot wrap up this episode without sharing with you what the executive chairman of the Rivers State Board of Internal Revenue said at the event.
I just want to use thanks for this opportunity to talk about self-assessment, because self-assessment is the other leg. You have the pay, which is for those in paid employment. So deductions are made at source. But then for those that are self-employed, that's where we talk about the self-assessment. Something I have noticed, which we have tried to address, is that most people come to collect their tax clearance certificates when they want to go to the embassy or when they have a contract. And they create the impression like they're going to the office to buy the tax clearance certificate. And I have said over and over, we've had to make announcements that tax clearance certificate is free. You're expected to pay your tax. That is, you file your returns, you are assessed, you make your tax payment, and then you collect your tax clearance certificate. I had situations in the past where I can get about 10 requests and everything is 50,400 for 4 years. And the 4 years is 2009, 2010, 2011, and 2012. Then I asked, if the basis of assessment is PY basis, how are you able to get your taxpayer to pay his tax for 2012 when the year has not ended? It doesn't augur well for us as professionals. It doesn't augur well for any set of people. And tax is supposed to be paid by all persons living in the states, not people that were given contracts by the states. Because when you talk to some people, they ask you, how much contract has the state given me? I can't pay, I won't pay tax. And that is not what it's meant to be.
We want to most sincerely thank you for spending quality time with us on today's episode of Tax Matters. We want you to enjoy your holiday. Please drive to stay alive. Don't drink when you drive. If you must drink at all, drink water. From Christina.
Thank you for watching and bye for now.
Bye for now. Happy 2013 in advance.